Hi, this is Leigh Gant with Georgia United Credit Union. Thanks for joining me for Kids and Financed Elementary. In today's session, we'll be providing practical tips to help young people understand money and manage finances. We'll be touching on the benefits of managing your money at any age and in any amount, the role of family in teaching about finances, how savings is a gift and the importance of protecting your money, basic banking, how your money grows, and saving for a goal. Before we dive in, though, let's talk a bit about the difference between a credit union and a bank. For those of you who don't know, Georgia United is a not-for-profit financial cooperative. This means that we are owned by our members and we keep the interest of our members as our top priority. Because we work for our members and not for stockholders, we help you to keep more of your money by charging lower rates of interest on loans and higher rates of interest on savings. With that being said, let's dive into our topic. Why should you manage your money? You are always in control of your money, no matter how much or how little you have. Your money equals your decisions. Financial stress can take a toll on your health, your relationships, and your family. Can you take a second to think about the advantages of saving money? What might you want to be saving for? The things that you want to save for are called goals. So here's the golden rule. Your parents have the gold, so they make the rules. That may be true, but the reason I bring this up is to demonstrate that parents are your primary teachers of money management. Society says it's rude to discuss money. For example, you don't ask someone how much money they make or how much money they have. However, in the normal course of life, your family will experience teachable moments, and you don't want to miss them. For instance, the car may break down and need new tires, or your air conditioner breaks, or you have an illness. Talk about it as a family. What choices do you have when you need money? If you don't learn anything else today, this is what I want you to learn. Spending gives your money away. Savings is a gift you give to yourself. Hold on to your money. You'll never regret it. And make savings a habit. Remember, the more you do something, the easier it is. So if you start saving a little money now, you'll be in a better position to keep saving in the future. And remember, money matters. Once it's gone, it's gone. Here's an example of how easy it is for you to spend a little money without realizing it till it all adds up. For instance, say you like going to Starbucks. For you, it might be fast food, Taco Bell, or something else. But just pretend you're spending $5 a day at Starbucks on a cup of coffee, and you do that 6 days a week, just during the school year, which is 36 weeks. Do you realize if you spent $5 a day for 6 days a week for 36 weeks, you will have spent a whopping $1,080. So it does really add up. Let's talk about some banking basics. What is a bank account and why do you need one? Your bank account is probably the most important financial decision you will ever make. You're going to use it so much in your day-to-day life. Does anyone know what to look for in a bank account? What would make a good bank account? Questions to consider when you're looking for a bank account would be, should you have to pay to use the account? Is your money insured? Meaning, is there some protection if something happens to it? How well can your money grow in your bank account? Do you benefit from payments of interest? What are your options for savings accounts? And where is the bank located? The answer to the question, should you pay to use your own money, is no. You should never have to pay to use your own money. And you should also watch out for hidden fees. Some people pay fees without even realizing it. So when you open your account, make sure you pay attention to everything they tell you about the ins and outs of the account and any fees that are associated with it. So how will your money grow? We mentioned interest payments a minute ago. So some accounts earn interest. That means the bank pays you a little extra something for having the account with them. You might want to have a checking account. Some earn interest and some don't, but you have the advantage of having check writing privileges as well as a debit card. You might also have a plain savings, a money market savings, or a certificate of deposit. That's an investment where the savings product has a predetermined maturity date. And someday you're going to be wanting a retirement account, although that's pretty far away from you now. How will you put money into your account? Do you get an allowance? Can you work to earn money? Would your parents consider contributing towards your goals that you're saving for? Back to interest. So, interest is money that the bank pays you for having your money at the bank. So, for instance, if you had 5 gold coins and you just keep them under your pillow for a year, at the end of a year, you're going to have 5 gold coins. But imagine if you put them in the bank where they earn interest. Say you start with 1 coin, then it earns interest. Now you have 2 coins. Now both of those coins are earning interest. So you're actually getting interest on interest. And we call that compounding. So you see the advantage of having your money in a bank and not under your pillow? Next, we're going to talk a little bit about saving for a goal. Goal setting. You might have heard before, it's important to have SMART goals. SMART stands for specific, what exactly do you want? Measurable, how much will it cost, including tax? Attainable, is your goal realistic or possible? Relevant, is your goal worthwhile and meaningful? And timely, what is your target date? So here's an example of saving for a goal. Specifically, I want to buy my mom a scarf for her birthday. Measurable, I know the price is $15 plus tax. Attainable, I can save my allowance in order to buy the scarf. Relevant and realistic, I can work to earn $5 per week. Timely, if her birthday is in 1 month, then I should have all I need. See how easy it is to walk step by step towards your goals? Let me tell you a little bit about Georgia United's youth programs. We start with Georgia United Money Mammals. Money Mammals is an account for children that are birth to age 11. It features fun games and apps that teach you about money. You can earn electronic badges for completing games and challenges. There's also coloring pages, videos, and more. Check it out at gucu.org/savings/youth programs. I encourage you to shop around for a good banking account. When you get a little older, our teen accounts are called Money Masters. Money Masters accounts are for children that are ages 12 through 17. This program allows for a checking account with a debit card in addition to a savings account. And there's also scholarship opportunities for high school seniors. As you can see, managing money is a part of life no matter what your age. Don't be afraid to try some of the ideas in this presentation or to ask your parents what has worked or not worked for them in managing their finances. If you have a question about Georgia United Credit Union or credit unions in general, or anything else we covered today, you could reach out to me or contact our Member Care Center at 770-476-6400. Thanks again for joining me for Kids in Finance Elementary. Now watch your money grow.